U.S. markets in rally mode, pinning their hopes on a plan to recapitalize European banks. France and Germany agree to support such a plan, but details remain scarce. French President Sarkozy pushing for a formal proposal by the end of the month. Earnings season kicks off on Tuesday, gold is popping, and the threat of volatility remains high. I'm Alex Steele, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Alex Steele with The Street, and together we bring you the morning call. So Scott, I'm reading the Journal this morning on my iPhone, and I clicked on this article, and you are in it. You are in it saying that there's a 75% chance we've seen the low in the S&P for the year. Tell me how you got to that conclusion.
Well, last week we came in and it was very bearish. The market was trying to break below that 1100 area, and two things could have happened. One, we could have broken below it, closed below it, and cascaded all the way down to the 1010 to 1040 level. But what happened is we saw a trap on Tuesday, meaning an outside day took place where we went below that level, stopped out some longs, came back above it, and trapped a lot of shorts that were just thinking that we can't go up at all, we can only go down, and we closed on our highs that day. So you know that day. We call it a day to take notice. We call it an outside day. You never know what it's going to lead to, but it's a day where you switch gears to let the market tell you what the next move is going to be.
Now, how do you know that this wasn't just a lot of short covering? Because I talked to some traders last week who said, any rally is going to be short covering and short term. How do you have more conviction?
Well, what you want to do is you want to see commitment to the move. You want to see it hold higher. And first, after Tuesday's move, you had 2 more days to follow it, to really push the bears, to their wits' end. Versus, it also made bulls feel like they missed something. So if you take a look at the chart here, you will see that this move happened really fast, where this was the reversal. This is when we broke below the range, came back above it, and then you had 2 more days to tack on to force some of those shorts to cover. But then on Friday, you saw some dip buyers come in. That hasn't happened in a while. So we wound up holding around 1150. So if you were bearish and you shorted all the way up, this gave you a minor way out. If you didn't cover, it's a complicated day for you, since we're going to be opening above this downtrend. Now, if we are close above this 1177, the 50-day, and close above this short-term descending channel, you're going to see a move pretty quickly to this 1220, 1230, which would be the top end of this range. So really, last week I put out a note saying, get flexible. It looks like the glass might be half full versus half empty. Get short off the brain, because this is a very similar setup to last summer, where we wound up rallying all the way into the end of the year.
All right, so get short off the brain. So if you were kind of keeping that tier 1, if you were staying lightly invested to take advantage of rallies, when would you be looking to add to that position? Especially if we open up big today, you don't want to chase, right?
Yeah, it's always hard when you open up 12, 15 plus handles. So if you're still in tier 1, I wouldn't race out today to go into tier 2, but I would be very aware of what's going on to buy dips. Look for breakouts on individual stocks. Look for these downtrends that we're going to go over to use as catalysts, because that's where you could add for cash flow to your existing macro long.
So now it's taking advantage of the volatility for the long side rather than to the short side.
Yes, and looking for relative strength and chart patterns, because chart patterns give you good entries. Now, we don't have a lot of stocks making new 52-week highs, which would be a little healthier. We don't have tremendous leadership, but there are different patterns here, a lot of downtrends that if you break it on an individual stock basis, shorts will cover, and that could give the bulls some cash flow.
All right, so let's get to where you might want to be investing your money. You want to check the temperature of the ETFs, of the sector, to see where you want to go into. So last week, it was energy, it was industrials, it was materials. Those were the stocks that were doing really well. So let's get to some of the ETFs. The OIH, have we seen the bottom here?
It looks like we have. And if you take a quick look here, we've talked about trying to find the bottom, and we tried it once here. Remember that day? It was a day-and-a-half trade. Okay, it didn't amount to much, but then look at this same pattern. This was a reversal down here. This was your buy area when it traded through this 99, but it didn't give you a 1.5 day. It gave you 3 days, and then it held on Friday. So if the OAHs hold above this level and it shows commitment buying, just say above 105, 106, I think there's a good chance you get to move back up to 120, 125 by year's end, and from here, that's a pretty big percentage.
And then what about the XLI? You've been hating the industrials recently, as much as I like to bring them up, but is the tide changing for this group?
Well, lately, they haven't been underperforming. If you remember, in the summer, they helped lead us lower. They broke that head and shoulders top pattern before the S&P, and lately, in the last month, they've been just trading in line, and I think they're still trading in line. So if you want to have some exposure to them, it looks very similar to the S&P. It's fine. Go with them if you're more comfortable there. But I'd like to see this hold higher, hold above this 29 area, go sideways, and then if it were to break this downtrend, which it could do today, it also could have a move back up to about 32.50 and then 33. So there is room here. It's just not showing any type of relative strength.
It's just not the best one.
It's just in the game. It's not a headwind. But it's not outperforming, it's just in the game.
Well, let's go to the Ags because they've been really beaten up when I go to MOO. But then I read an article in Barron's over the weekend that was very bullish on all ag stocks, from fertilizers to like the Deeres of the world. So what's the pattern telling you at the moves?
I think it looks good as well. It didn't outperform. This was a bottom feeder type of trade, just like the OAHs, where remember this reversal we tried to play and it got nowhere. Just was met with selling, and that was our stop. Well, here is that outside day. This is when it traded below that low, trapped the shorts, got some people long. Short move up. This too, I'd like to see some sideways movement. I'd like to see it hold this, just say 43 area. And then, maybe it starts getting above this area and you have a move back to around 48. And if this gets back to around 48, another just say 10% or more, you will see stocks like Mosaic, you'll see Potash, you'll see CF, you'll see a lot of those go, and we'll have them at another time.
All right, let's go to two sectors then that have been holding up even better than these guys. That's retail and the Qs. If you were to sort of pick one, which is your favorite? Do you have one?
Well, I don't think you need to pick one because they're so different between the NASDAQ and retail, but these two held higher. I want to show you the difference between coming off the bottom and showing relative strength. The Qs, take a quick look, they never made a new low. Okay, they came back, retested the low where all of those other ETFs broke those lows, so this snapback was pretty sharp. So right here you have a pretty big downtrend also to get through, but if this starts to get above 55-ish, you're going to see a move back to 57 pretty quick. And the RTHs also, look how this showed the most relative strength. This came in, held higher, didn't even get back down to retest the lower support, and look how sharp this move was. I'd like to see this hold above 103, and if this starts getting above 106, this group could be one of the first groups to make new highs, if any group makes new highs this year.
Does that seem counterintuitive all to you, tech and retail? I mean, it seems like, well, why particularly retail? I mean, I know we've had, the employment number was better than expected on Friday. We've had better than expected data, but it seems odd that retail will be the number one sector to go first.
Unfortunately, the market tries to make as many people feel frustrated as possible. So everyone would have thought everyone's out of work, no one has money, no one's going to go spend. But I guess the American consumer just loves to consume, and maybe there's a lot of shorts trapped. I try not to read too much into it. I like to see when composure changes. And right now, the composure in the retail area is very strong.
And stock specific for sure.
Yes.
Definitely look at those low-end stocks. Okay, we'll be right back with some more quick ways to make some cash in one sector that's not doing so well. That'll be the financials. Stay with us.
When the closing bell rings, it's not quite time to run off to happy hour.
Good afternoon, Scott Redler, T3 Live. Welcome to today's recap.
Before unwinding, take stock of the trading day. What's the complexion of the market? Which trade from the morning call triggered? What sectors are in play? And where will the opportunities be tomorrow? Scott Redler covers it all in the T3 Live Daily Recap video. The T3 Live Daily Recap airs every day after the close.
As far as these markets are concerned, we got to take off those glasses.
All right, welcome back. We're going to get into the financials. Up about 4% last week, but really got hammered on Friday. We're in the worst performing sector. Scott, what's the future of the financials here? Because macro picture, nothing's really changed.
Well, what's interesting is on Friday, when I was getting all those negative notes from the bears, they were like, look at the financials. There's trouble there. There's trouble there. And I was like, you know what? Technically, it doesn't really look good that on Friday it gave back all of Thursday's gains, but they held Tuesday and Wednesday. So for the financials, being up and holding a bit higher, I guess, is a positive for now.
So not going lower, I guess, is what we're saying.
And showing a little bit of commitment. So I'm going to show you the charts of a few of them. I'm first with the XLF, where I'd like to see it hold. And then there's a downtrend in this group that if it breaks to the upside, the whole market together could get frisky.
And you have to ask if the market's going to drag the financials higher at some point.
Well, it could drag it a little bit higher, considering how beaten and just battered and bruised they've been. But the question is, can they be more than just a small oversold bounce? Can they break some downtrends? Can you actually buy some strength in the financials, which we haven't been able to do for years, and get rewarded? Because anytime you play one of these oversold bounces, it's great for the trader, but if an investor gets in there, by the time they're buying it, they're heading lower. So let's look at the XLF. You can see right here. This was the outside day on Tuesday. Pretty severe, made a new low, closed higher. Then you had 2 more days to follow along, but then it wasn't strong enough to break this downtrend. So on Friday, you did get a pretty potent down day, which took away Thursday's gains. but we're still above, just say 1150, 1175. If it can hold in this area, which is going to be opening up, and start to get above this, just say 1230 to 1260 area, because that's the moving average, we could break this downtrend at some point this year. There's no reason why I'd see crazier things happen. The XLF get up to, the mid-13s, which would be a nice percentage move and give some, a decent-sized bounce to some of these financials.
All right, well, let's go to JP Morgan then, because you always kind of say for an investor who needs to own a financial, this is the best of the best, but it was down almost 5% on Friday. What level does it make it attractive to add to a tier 1, say?
I guess only on weakness, unless it really breaks these downtrends. Last week, it was one of the first banks to go positive. I remember looking at it on Tuesday. It was trying to be green while the market was getting hit. I'm like, oh, this is a little interesting that Morgan and JP Morgan are trying to hold up as the S&Ps are making new lows. Gave you some signs. That's how you connect the dots. But now, JP Morgan already had a small move off the low. So if you look here, this was Tuesday's scenario where it made a new low, came back above, 2 more days on top of it. I don't like to see Friday's day being just as negative as Thursday's up day, but you still have 2 days in the bank. So trading it against 30, I would say could make sense. If it starts to get above 32, which would break this small downtrend, it could get up to about 36. I know that's not a lot, but for financial these days, you got to take what you can get. So if you look at the macro chart, you will see, I'm not saying it's going to make new highs in the year, but there's no reason why you can't get to 34 to 36 on JP Morgan.
What about Morgan Stanley? It was such an attractive stock for the shorts recently. When do you think they're going to be shaken out of this trade, or are they still just weighing on the stock?
I think the first part of the shorts had to cover. It also showed some relative strength. It was like a coil, and it went nuts to the upside, and that was the first move. The question is, can you get a second or third move in these financials, because they just don't happen. And I don't think you should be heavy at all. Why be in the place where there's smoke and fire when there's easier places like retail and the Qs? But again, some people love to be in some financials. So if you take a look here at Morgan, you will see, it also had a really nice reversal bar. This was Tuesday, same pattern. So look, patterns repeat themselves. Your first buy was when it went above 1236 to get back, the lows of the year. Nice move right back to resistance. I didn't like, again, same type of bar here on Friday, but you could maybe buy it versus the low 13s. So you're buying a dip. And then if it were to ever get going above this 15-ish area, you could have a quick move back to 1850. Remember, the insiders were buying this stock above 20, and that was only in the beginning of the summer. So why not get back to 17, 18?
All right, let's go to maybe some financials that aren't financials, and that's the Visa and the MasterCards of the world. Do these maybe make a safer bet for investors when they get dragged down by the rest of the group?
Well, that's what happened about 3 weeks ago, finally, when the pressure started to mount on some of the high growth areas. You saw it in high beta, you saw it in a few places. We put that stopping on MA when it broke its uptrend. So if you look here, that's why you have to actively invest. We had this predefined area. Remember this little red dog reversal we talked about when it tried to break out and failed? That was your way out. Then you had your downside follow through. And then we talked about this uptrend that was in place. And when it broke and it went about 30 to 50 points lower. And now I think it's going to retest this 325, but I think there's some problems here. If you want to be tier 1, that's it. Some traders would probably try and reshort it up at 325.
So be careful.
I would be careful here. It's a bit broken.
All right, let's go to some fast ways to make some cash. How about that? Let's go to Apple. So closed about 2.5% lower on Friday. Will it hit that 350 area? Of course, I read over the weekend that AT&T was saying that the orders for the iPhone 4S, the pre-orders, were the best in any iPhone history.
Well, lately, it's been a very strategic trade. It's been showing some relative weakness, but there have been some buys. And when they announced the passing of Steve Jobs, it was down like $5. And then you could have bought it there. It went positive and then went right to the 50-day where you could have sold some of your longs and then got short and then it moved down $15. So it's been a very, pick your spot type of trade. So if you look here on Apple real quick, I promise everyone will be a lot quicker, but it's Apple. It's right here. It's below the 50-day. It's below this little uptrend. I think it's going to be trading below this up until earnings. It's good that it had good news. It's up $5, but be macro tier 1, but also just keep your head out of the sand that it's showing a little relative weakness.
And most analysts I talk to actually say that come earnings, that's going to be the big catalyst for the stock. So just to be aware that it could be floating around before then.
And if I could have one message to Tim Cook, split your stock 4 for 1. You split your stock 4 for 1 by Christmas at $600. All
right, fair enough. Amazon. What do you do here? It's been holding up really well, kind of outperforming the rest of the group. I
think it could continue to bounce to about 232. That's where I see resistance. If you traded it long, sell into that area for now.
What about VMware? It didn't really show a lot of strength on Friday.
VMware's been hanging around. It had to move off the lows. It has some resistance in front of it. I do consider this still a macro tier 1 if you have to be in some stuff. You have resistance right around this 92 to 95. It didn't make new lows, so it's showing some relative strength, but it's going to have a tough time getting through here. It's going to be all about earnings for VMW.
All right, and then what about Chipotle? Had some downgrades last week. Can you take advantage of the weakness we've been seeing?
I guess for a trade, I looked at it. There's a small little pivot for cash flow, so I have to put the chart up so you can see that pivot. You know, you look down here. It sort of broke its momentum when it had this outside there right here, and then it broke this mini uptrend. But right now, you have a small little wedge right there. I'm going to magnify it for you so you can see that there could be a cash flow trade here. I would just be careful investing. If it starts getting above this, what is this, 301, 302, you could have a quick move back to 310.
And last one, Cena, excuse me, tanked about 6% on Friday. What do you think?
It's the weakest
Short?
in that group. You could just be careful with Sina short because it's been down so much. I'd rather see you buy Baidu versus Sina.
All right, fair enough. Let's round it out here with gold. It seems to be clawing its way back to the $1,700 level. Ironically, as stocks move higher, so does gold now because investors and traders don't need to liquidate gold in order to make up losses in stocks. Go figure. Totally. I'm hearing that eventually that inverse correlation is going to come back into play and change. So, interestingly enough. But for now, would you be buying then as long as the stocks are going higher?
I think we're opening above this lower pivot, so there is room to the upside. We've talked about this lower pivot saying I wasn't sure which way it would resolve from here, but it seems like right now it's trying to resolve to the upside. So obviously you should be in your tier 1 macro gold, which we always talk about staying if you have that thesis. But this is this lower range after the correction. Here's your outside day, up at about, 184, 185, and then this lower end of the range, it's opening above it. I would say you have an easy room on the GLDs back to about 165, 72. It could easily fill the gap also, and then right around 170, it's going to really have to prove that it has a higher level for it for the end of the year thesis.
And definitely watch the dollar, because as we get more confidence out of the Eurozone, or as investors take it as having more confidence in the Eurozone, the Euro's going to rally, the dollar's going to fall, and that's also going to be good for gold. So that's a dynamic we can't forget either.
Yes, I just think that the moves in gold are going to be somewhat muted from what we've had over, before it broke. So just don't expect too much. If you bought this dip, I'd rather see you buy the dip than chase the excitement if you have a long-term thesis. But also don't just put short in the brain, because a lot of people think that gold has to go to 1,1300, and it doesn't.
All right, fair enough. That's it for us for today. Happy trading, everybody. I'm Alex Steele from The Street.
And I'm Scott Redler from T3. Make sure you follow us on the virtual trade floor and in the chat. There's a lot of news going on. Intraday will help let you know where the relative strength, relative weakness, and just help guide you through this volatile trade. Or see you at the recap. Have a good day.